Hello traders, Vladimir here from Home Trader Club, and in this video I want to share with you one of the best ways to trade with the MACD indicators. For those of you who know me for a while, you know I'm a huge fan of the MACD indicator. Of course, I never use indicators solely as they are. I always love to combine that with price action. Remember, indicator indicates, but the price dictates. So in this video, I want to break down one of the, from my point of view, most powerful ways to trade with the MACD. Let's begin. Before the charts, I want to take the opportunity and to thank 8K Broker for supporting our community. You can still enjoy all the amazing offers we have with 8K Broker, including the access to the club, the trading strategies, all the indicators in the marketplace, the courses, private sessions, and more. Take a look at the link below this video in the description for all the information you need. Now let's begin. Let's take a look on this chart. Pound Aussie 4-hour chart. I'll be using it just for example. I'll show you a few more examples, but just to present it, I chose this one because it has a classical conditions that I want to show you what exactly you would want to see. Before that, if you have no idea what the MACD is all about, then I really recommend you take a look and watch this very video. I hope my finger points to the right place. This very video on the right top corner here, that it will give you introduction to the MACD. Of course, in our channel you can find many more videos covering the MACD in many different variations, because as I mentioned before, it is one of my favorite indicators. So the way, and also by the way, if you don't have this MACD indicator, you can download that from our indicator in the marketplace, and you will be able to find all the information with the link below this video in the description. So what we will need for this strategy, and I'll break it down to steps, is key trading levels and multi-timeframe divergence. After the divergence, you would want to see the initial move taking place, and then after the pullback, you would be looking to trade. So basically 4 steps. Step number 1, key trading levels. What does that mean? I'll give you a very simple explanation. I would really recommend watching our price action courses we have in Home Trader Club that will break it down how you can find these key levels properly. So in a nutshell, I would say this is, you know what, let me go to blank screen. It will be easier to draw and explain. In a downtrend, you will want to pay attention to the highs, as they give you the zone where sellers already proved interest as opportunity to go and to find here possible trades for the trend continuation, either from the first high or the second high. In an uptrend, what you will be looking for, are the lows, okay, as these are the levels where the buyers already took control. And when and if, very important to mention, the market retests these areas, you would be able to spot great opportunities around this very zone. Okay, so that is the first thing that you would want to be able to find. Ideally on 1 or 2 higher time frames from the time frame you trade. In our case, we are trading the 4-hour chart. So if we take a look on the weekly chart, we can see, take a look on all these zones we have here. It's a huge zone of sellers where they took the control. Look at all these spikes here. If I cover the spikes, let's just put it here. If I cover all the spikes from the close, from the open of the red candle through the peak of the green candle, this is the huge key zone. And now as it is being retested, this is the place where we say, aha, we might be looking for this opportunity to provide the sell. Okay, so you will want to find on one or two of the higher time frame, from the time frame you trade, you would want to find these key levels. Second step would be to find divergences. But before that, I would like to invite you to our trading family, the Home Trader Club, where you will be able to get your access to very comprehensive, full, complete trading courses, which you will be able to find here inside under the section of education. You have parts for the beginners, you have videos for the advanced, which are also spread in the media zone. You have courses there inside. You would be also able to enjoy our trading, real-time trading education and trading opportunities shared with you in our dedicated training channel. You will be able to find the videos and of course the detailed trading journal that you will be able to find anytime here and in our dedicated Telegram group. Besides that, you would get your access to our weekly videos, educational videos, market analysis, comprehensive detailed explanation on all the trading activity. You would be able to watch all the webinars, educational webinars on tons of subjects, including the cycles, the divergences, candle patterns, price action, and way so much more. So that's another thing you have. You would also have a lot of trading tools you would be able to find inside, and of course access to our community. So join our family with the link below this video in the description. I hope to see you with us. To be able to find a divergence, you would need to remember that in a bullish trend you would want to see higher highs on the chart versus lower highs on the MACD moving averages. Okay, this would be your second step. In a downtrend, it would be the opposite. Lower lows on the chart versus higher lows on the MACD moving averages. So in our case, at the end of this beautiful, as you can see here, run we had on the pound Aussie, we are coming to the end with this bearish divergence. While the market is making higher highs, the indicator makes lower highs. Now, one of the conditions I personally favor it a lot is when between the first two highs there is a divergence, between the next two highs there is no divergence, but between the first and the last high, comparing three highs, there is still divergence. This is one of my favorite conditions that I love to trade with. It's like a fake high under the circumstances of divergences of deviation forming. So this is the second step that I am looking for in this strategy. We found the key level, we found the divergence. The next thing is to get, after the divergence completes, to get the first leg down. It's that simple. Move down, that usually should happen at least in the three candles that actually make lower highs. As you can see here, lower lows. That creates for you a legit move. The next step, get the pullback, but this pullback should not cross above the high that was created while the divergence was forming. By the way, a very important tip would be if at that point the higher time frame would also have divergence. And if we examine these two peaks, you can see in that case we have divergence on the histogram and the RSI there as well. It is screaming that we are around a peak. So what we want again in the final stage is the pullback to happen, and then pay attention, you would want the next peak on the MACD to form and the next cross, negative cross, to complete. Okay, so you got the pullback. Pay attention, like it was attempting to make a pullback here, but there is no positive cross here. Therefore, we do not pay attention to that. But in that case, you got a cross and you got then the moving average crossing down again. With all the higher time frames, levels, divergences, everything lined up perfectly. Now, one of the reasons I love this strategy is very simple. It's because it has very great risk-reward ratios. And if you don't understand how critical in trading risk-reward ratios are, I really recommend watching this video that you can find on the right top corner of this video. It will give you a great understanding how important these numbers are, how they can help you in your trading, achieving phenomenal trading results. So once that happens, and once this cross completes the moving average cross, that's where you would be looking to go and look to sell. We would want to protect above the recent high, and the targets that you would determine would be based on the next key levels. And as you can see, there is this key level, but the risk reward would not be positive around this zone. The next key level would be right here. And in that place, you would be getting a fantastic risk reward ratio that will put you in the position where the numbers work in your favor along with the chart. And that's what you would want to look for. Now let's take a look on the next example, and this time I want to take a look on the buys. Let's take a look on Aussie franc as for the buy. So step one, as I said before, you would want to look at the lows in an uptrend. So we got these two waves to the upside with this low playing a significant level. What happens here is the market comes to this area, retested, goes below, but fails to hold below and bounces back to the upside after that. What happens on the 4-hour chart, which is the one that we'll be looking to trade, is that at that point it was false breaking or cleaning the low on the daily chart. This is the second step that happened on the 4-hour chart, and that's a bullish divergence. At the end of the bearish trend, we got the conditions of lower lows on the chart versus higher lows on the MACD. What you will want to happen next is the market to make the rally. This is step number 3. After the first rally, you would want the market to make a drop down or a pullback, and you would not want it to go below this low that was created on both the 4-hour and the daily chart. And the final step for you would be step number 4. That's where you would be looking for the moving average of the MACD to cross up again, and that happened right here on this green candle, as you can see. Okay, as soon as it becomes green and the moving average crossing, that's your call. So once again, you would need to define your key levels on the horizon. So if this is your buy and the protection would be below the low, you would need to define a key trading level that would be a legit target with numbers that work for you. What are the key levels here? We have this high, but there is no good risk reward in that case, and the next important high on the way would be right at that zone, and this would be the place where you would want to set your target. And in that place, if you compare the risk reward ratio, you would be able to get here. I think this is actually about 1 to 3 here. It's about 30 points versus 90 points. Yeah, it's 1 to 3 risk reward, which again makes the numbers work for you. Now, will this strategy have 100% success rate? Of course not. No strategy on earth would ever give you 100% success rate accuracy. But if you keep and respect these elements I just showed you, if you keep and respect the risk-reward ratio, which is to be at least 1 to 1.5 or 1 to 2, then all you need is as low as 50% of the time, even less, to be right and make great returns. And this is where the power of this strategy is that it is based on technical concept, the levels, the divergences on the multi-time frame, actually the reversal and then a pullback, which holds, and of course risk-reward ratio that gives the numbers chance to work for you. That would be it for this video. I hope you find value in this one. If you do, please don't forget to hit this like button. If you are new to our channel, please consider to subscribe with the subscribe button below this video. And once again, I want to invite you to our trading family, the Home Trader Club, where you will enjoy from all the things I mentioned before during the video. And you can find the link to join below this video in the description. Thank you very much for taking the time to watch this video. If you have any questions, don't hesitate to ask in the comment section. I wish you and yours all the absolutely very best. And good trading. I'll see you soon with more educational videos. Good trading. Bye for now.